Hello, traders. This is Michael coming to you from GammaEdge on March 12th, Wednesday, March 12th, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're looking currently at our market trend model. This continues to be in a sustained downtrend as we've discussed really the past 2 weeks. Looking at our overall longer term market model, the red below cyan is continuing to the downside with negative slopes. So obviously, if you're a longer term player in the market, you would want to be in cash or capital preservation mode. In our shorter term look, our bolded white CT, this is our instantaneous CT intraday that we continue to monitor to look for any improvements in the buying versus selling. And we continue to not see any of those improvements as we discussed yesterday. And then our moving averages, which is our shorter term 1 to 3 day look, continues to the downside, as well as expansion, even with the late day move back up in price appreciation. So what would be, and then on up here to our filtered cumulative tick, we continue to the downside also. Institutions continue the selling, not as much as yesterday, as you can see here, but selling continued. And then our breadth indicator to the top, new lows still outpacing new highs, so really no improvement there in the overall market breadth. So what would we look for a turnaround in the overall market trend model for us to start changing our thesis slightly? First of all, you needed the bolded CT to cross above the moving averages. That's step one. Then you need the moving averages to start trending in an upsloping manner from lower left to upper right. And then via our tick tag combos, make sure to review those in the market trend model channel. But at least you would need to see a close above a previous day close. So that would be a TC8 close above a previous day close, and we have not sustained any of those for the past few days. So all in all, continued downside look within the overall market trend model. We'll be monitoring the instantaneous CT intraday to see if we see any improvement, and we'll notify you if we observe some of that. The SPXP, all expiries turned on. We continue to be put dominated across the whole complex. Obviously, you can see just an inundated amount of puts, indicating obviously our gamma condition is put dominated above and below the spot price, which is our bolded yellow line here. We're significantly below transition also. So if we wanted to see any improvement in the market, the first we would need to see is a close at least up into transition or towards transition. We continue to not see that occurring. GEX ratio inlay in the lower right here. We are hitting extremes. Again, just want to remind everybody, the GEX ratio is a better put call ratio because we have a time component included in this measurement, but we are hitting historically levels where we've seen some sort of bounce down towards below the 0.6 level, getting to the 0.43 level is an extreme GEX ratio. So that just means that we have significant amount of put gamma and put delta within the overall complex, and it is reaching probably an extreme point where we could see some sort of relief bounce. Now, that is not a bounce that would be most likely sustained unless we see lots of other factors changing within the overall market structure, sentiment, and trend that we can discuss here. But as you see, 5,600, extremely important level, around Livermore level. We've discussed that. We tried to get above it yesterday, failed kind of miserably into the close there. But now pre-market, we are looking like we might be above 5,600. So any retest of 5,600 is going to give us a great overview of how the market may trend for the day, or how speculators are looking. So we'll continue to watch that. Expected move today is extremely elevated, so make sure you're watching that. With this in the put dominated or put gamma environment, obviously increased volatility. So just make sure you're managing risk appropriately. Smaller size, shorter time frame, and if you do not see any setup or don't feel comfortable, cash definitely is a great position until we get into a regime change of where it would be call dominated. Call gamma position with dampened volatility. Much easier to trade those pullbacks in that environment than in a put dominated gamma environment there. So SPX P0DT, a lot of charts here going on. We have the expected range outlined. You can see, or expected move, sorry, outlined here. Just a significant overall movement, even down towards 54.50 to the downside, which is pretty extreme. Not anticipating us to go there. but just understanding the what is happening within the overall structure and sentiment that we are in a highly volatile environment, getting bounced around very rapidly back and forth as you saw yesterday, and we can experience those V-shaped rallies very quickly. And so if you're on the wrong side, obviously you can take some capital hits pretty quickly if you're on the wrong side. So make sure if you are trading 0DT, these are button C trades with this environment. I can't really stress that enough. So drunken sailor range for today, 5660 to the top side and 55.50 the downside. Obviously, understanding where transition is, 56.50 up here. If we get above 56.50, then we do have the opportunity to move up towards 5700. That would be my first if then to take a long position above 56.50, and I target would be 56.70. Within this overall drunken sailor range, you see some areas that have lower exposure. Again, we'll be at the mercy of the 0DTE positioning. So obviously watching vol-M, vol-D command intraday is the utmost importance, understanding what is happening with those positive and negative slopes. If they are positive, if we do see positive slopes on the call centroid and put centroid, then obviously market participants are speculating higher. So we could have a price appreciation as we already discussed. Conversely, if they're negative put call centroids, then obviously price depreciation could be in the cards. And then below 5600, I'd anticipate a move down towards this 5565, 5570, probably a low of the day test from yesterday. And then obviously we see PGX down here at 5550, what's going to be extremely important. If we, for some reason, we got below 50, if we or below 55.50, then obviously 5,500 is that next larger number. So potential setup for Vanna Rally, we've discussed that 56.50 multiple times throughout this week. Again, that's why I said above 56.50 would be my thesis to move up towards 5,700. That'd give us a nice push up there. Understanding we're still fairly put dominated in the overall structure, so could be difficult to move to the upside depending on how speculators are positioning. So we'll be watching the net stack command that really gives you a great overall view of the highest sensitivity strikes at the moment, and then understanding where those sensitivities can occur and then if spot price moves through those. Obviously, we always discuss moneyness matters, so moving from in the money to out of the money or out of the money into the money, understanding how that really affects the overall price movement. So for today, really those levels are laid out at 56.50 to the upside, 5,600, and then to the downside, 55.65. Delta balance. This is really one of the key tools that I watch, at least for my swing trading and for my trading overall plan. We do see the delta balance as noted here with the SPX still at pegged at -1 in the right-hand plane. So obviously out of the money call speculation is not occurring at the moment. We do see the left-hand plane obviously trying to inch up and stabilize there just below 0. So we're watching below that spot price to see if we do see some erosion of those out of the money puts below us. So then that would become some sort of supportive type action if we do actually start to see in the money calls below us. So then any pullbacks towards those levels without significant change in sentiment, structure, and trend could be opportunities to start to a base start to be built within the overall structure. But we're going to have to see that continue day over day and not just have a one-day flash in the pan where the out of the money put speculators took some profit and then they expose those in the money calls below us, but then they come back in and start speculating back to the downside again, swamping those in the money calls. So then that would lead obviously to more price depreciation to the downside. So we're going to intently watch that delta balance on the SPX, and we're going to talk about some of the other delta balances here in just a second. Delta balance IWM sort of kind of improving a little bit. Projected on out in time. Again, this is kind of our crystal ball with expiry and positioning of how market participants are positioning. So we do see this improving across all sectors except the SPX. So that's why I'm indicating that we could see some sort of bounce with what we're seeing in the overall change of the sentiment and structure. Now, this would not be a sustained bounce. We're talking short term, most likely, and then we'd have to see a lot of other factors improve for us to really change the overall structure and sentiment of the market and start to turn the Titanic. So IWM improved slightly, DIA improving slightly. What you want to be watching for is left-hand plane, right-hand plane crossing back above zero, at the very least coming off of the peg -1. That's extreme put speculation above and below spot price. So we do see that improving a little bit. DIA left-hand plane. So some of those out of the money puts are eroding or being closed and exposing some of the in the money calls below us. Qs, same scenario here. You want to see us come off this -1 pegged. You'd like to see the left-hand plane come up, and then the left-hand plane can really only carry us so far and then become supportive. Then you have to start seeing that right-hand plane, those in the money puts start to close. That opens up, the canopy, as I want to, make a visual, and then you have to see some right-hand plane, which is out of the money call speculation. Spot price is not going to move where you do not have call speculation or option speculation, right? So if we see those in the money puts above us start to close, and then some out of the money calls come into the overall structure, then we do have the opportunity for price appreciation. But that is not going to occur unless we really start to see that visually through Delta Balance and Web App and net stack command. So we're going to have to watch all three of those, and then obviously intraday if you're trading, watching vol M, vol D to see where those speculators are positioning. VIX really pegged at +1, so really no change there. We do see a slight drop in the overall left-hand plane, but we're still above zero. So to see a significant sustained move in the market and a significant drop in VIX, we really need to see these come down below zero and start trending down towards -1. At the least, it needs to come off the +1 pegged area. SPY, same thing, slight improvement, just nothing spectacular or great, but could be slight improvement. Now, this also could just be a relief type of bounce where we've hit an extreme, put speculators are taking profit. We see that relief bounce up, and then we see this whole cycle change back over again. Make sure you're looking at our GammaEdge framework. We have a beautiful sine wave chart of how this occurs, just the ebbs and flows of the market from options speculators. And this is basically probably what we're going to see. Possible bounce, some relief. The put speculators take some profits. We, maybe see some out of the money call speculation come in slightly, but then that goes away really quickly. And then you start back down the other side of the mountain. So make sure you're checking that out. And the SPX we already discussed. So thesis for today. Sorry, this is a little long. Trying to get back into overall trading after being out for a week and just looking at the overall market and trying to give everybody an overview. So what I've done is, and what I like to do every morning is, I take our SPX game plan, I overlay our levels. Obviously the yellow box is a drunken sailor range. We tested that pre-market. So for me, that's a take notice area. The 0DT DEX plus trans is at 5650. We've discussed that extensively this morning, so I'll draw a line there. You can see where we were rejected this morning, right? So this is really the line in the sand for us to get above if we want to have any price appreciation. You can see what happened. We come up to that price, we were rejected. COTMC is there. This is the full complex COTMC that I have overlaid from the morning run. So you see that out of the money calls go in the money and speculators take profit. So there's just a massive confluence there sitting of overall areas that we can watch. And then to the downside, we see plus GEX trans down here at 5570, and then the bottom of DS at 5550. I'm not anticipating we test the bottom of DS. I'm anticipating that we stay within this overall range, possibly test back down towards 5600. You kind of see a price TA level starting to build around that, and then we'll kind of evaluate. If we get below 5600, personally, probably I'll be looking to short, maybe down towards 5570, 5550. Not trading or financial advice. That would be just kind of where I'd be looking. But remember, within the overall drunken sailor range is very, very volatile. So you have to have shorter time frame, be ready to take profit very quickly, and understand that you can get chopped up. I would rather wait for that certainty. As we saw yesterday, we had that game plan laid out. If we were above a certain level, we were able to go long. Below a certain level, able to go short on a rejection. And that provided us a very nice trade yesterday. So all in succinct, still very put dominated. Paul laid out a nice 1, 2, 3, 4, 5, what we would need to see in the overall structure and sentiment for the market to change for a sustained bounce. For me, MTM, it starts all with the MTM, looking at that. Then the delta balance, understanding the web app, if we see some call speculation come in and erosion of puts, and then the net stack command. So really those are the four things I'll be looking at to see if we're seeing any sentiment and structure change. And then obviously the market trend model would have to really start improving very rapidly and start moving from lower left to upper right, indicating that buyers are taking control back of the market from sellers. So hopefully that helps everybody. Sorry, long one this morning. We're into 15 minutes here, so significantly long, but I'll be around this morning if anybody has any questions. Let's make it a great day. Thank you all. Thank you everyone for joining us here at GammaEdge, whether you're a new member or existing member. We're really trying to, obviously we've been honing in all of our, tools and helping everybody and just producing a massive amount of education. So if you have any questions, make sure you ask. We would love to get you up to speed very quickly with our tools, understanding how we look at things within the lens of the options market, and then how to trade, whether it's single stock stuff in the single stock discussion, or whether you're SPX or DT. So let's make it a great day. We'll see you in the Discord in a few minutes. Thanks, everybody.